I was on the internet earlier today, Reed, and I came across the CNN Fear and Greed Index. I don't know if you guys are familiar with it. Let me go just share it on my screen real quick. The Fear and Greed Index. What CNN, a little bit of background on this Fear and Greed Index. It is a way to gauge stock market movements, whether stocks are fairly priced. The theory is based on a logic that excessive fear tends to drive down share prices, and too much greed tends to have the opposite effect. Now, for those who have been following the market this year, especially on just a S&P 500 or the Nasdaq, it has been a roller coaster ride on the way down. We had an all-time high in January of 2021, and we've had peaks and valleys, but overall, we have been over 30%. We are in a current 30% drawdown since the high of January 2022. Excuse me. So this is very interesting. So I have it on here, the Fear and Greed Index, right? Back in January, you can see it on the screen, or you guys can feel free to pull it up on your time if you have it. So just Google the Fear and Greed Index, and then you should end up on CNN. So on January 3rd, the Greed Index was at a high of 65. At the low following, at the end of the month, January 27th, we were in extreme fear at 19, a score of 19. And you just follow it throughout the rest of this current year. April 4th, we had a peak of greed, followed by another valley, deep valley. We were down to a score of 4 on the extreme fear side. So currently, fast forward to October 11th, we are currently at a score of 20 within extreme fear. Now, what does that mean to the normal person, the average Joe, the person who's just working their career, right? What does that mean? If they have a employer-sponsored retirement fund, that will be affected because it's based on mutual funds or different type of investment funds, and everyone's feeling some sort of pain now. We've had a high. Everyone was making money last year and the beginning of this year, and then now we're slowly seeing just the trickle and the decline in many accounts. What else that the average person would see? The higher gas prices, commodity prices, electricity, food, the overall inflation. You probably heard that in the news. A lot of these different things are just happening, and that's where you can kind of tie in and kind of relate the current market with the extreme fear or the greed index. How would you translate this, bro?
I just translate it as a cycle. Like, hey, look, it's a chart and it's identifying cycles. Okay, it's up, it's down, it's up, it's down. Where are we at now? We're like midway down, pretty much. Extreme fear. So more to come, right? So I mean, it's just eventually we're gonna come back up. And greed will come back to play.
What
But
I also see from this too, just to add on, is the confidence in the investor. The market is it's created by many investors across the globe, and especially for, I guess, the U.S. market. I feel the confidence in putting their people and the investors putting their money in the market is low because of this fear factor. And that's we're gonna segue into something totally related, because this is a emotion that every single human being feels, and this has many relation, or it ties in almost directly with our trading decision. The way I translate it is, if there's extreme fear, an investor or trader can be more likely to stay in cash, not be aggressive in a position when opening in a position, or if they see a setup, maybe they risk less than 1% compared to their normal 1 or 2%. I see all these different things, and it could fluctuate. It could mean bigger funds buy less. We don't know. So that's what we kind of want to dive in tonight on the different ways of being fearful in the market. And so we're kind of rounding it up to 4 different things. We've tried to just simplify, because fear is such a big emotion and a lot of things come to mind. Everyone has a different experience of fear, but we want to just tie it into 4 groups of fear relating to trading. So the first group of, or first subtopic of fear, would be being wrong, the fear of being wrong in the market, the being wrong in the investment decision that someone made. It is a general fear that people have towards their analysis. You have these big funds that they hire all these quants and professors, and they make their big decisions based on all of these people's analysis. And so when you're a quant, or you're working on that team, the pressure is on. You feel that pressure, and it's only natural for someone to have a fear of being wrong. Oh, my decision is going to affect this $1 billion fund. Imagine you wake up and you walk into your job and that's exactly what you're dealing with. How would you translate being wrong in a trade or having that fearful thought?
It's a heavy weight. I was just thinking about your example. And if you're walking into a $2 billion or like, $1 billion account, and like you lost money because of you being wrong, you have to have strong mental fortitude to overcome any negative. You're in that position for that reason. And one of them is overcoming that fear, that fear aspect of fearful of being wrong. Because yeah, being wrong will cost you money, but I mean, it comes back to the probability.
Well, yeah. Let's say the trader was wrong in the decision making. They analyzed the chart. They put in a 1% risk in their trade, and they were wrong. The market went against them, and they lost money immediately. Through that trader's mind, a lot of these emotions these thoughts may come up. It can have devastating effects on your decision making for the next trade. A lack of confidence. After a stinging loss, we kind of shy away from experiencing another loss. So that means we might sit out, or we might walk away, we might do different things to kind of avoid that next fearful action or consequence.
When I think about like being wrong, it's more so like I want to be right. Like it's the complete opposite. You're never right. You're jumping into small moves that the market provides. The market is always right. You and your system may not always be. Yeah, you want to be right so bad that you're afraid of being wrong.
What you said right there, that one liner, the market's always right. That took me a minute to understand that line, and that put into the right perspective for us to walk into the market. Having the right perspective and kind of knowing where you stand as a trader, a individual trader, if you have a fund and whatnot, knowing where you stand in the market and having that perspective of, yeah, the market doesn't owe me anything. It doesn't know who I am, doesn't care how much money I'm trading, but just having that correct stance can help you cope with this feeling, that fearful thought of being wrong. Dive into the next one.
Fear of losing money in the markets. Like we just talked about that example, like the guy who owns a billion or is running $1 billion firm, and they lose maybe $100,000 that day, that morning. That could be a fearful thing. Fearful of repercussions.
Fearful of getting fired. Losing money never feels good. For those who've gambled or made prior investments before getting into the market, having a bet with your sibling, making a wager, losing a few $100. I think everyone starts somewhere when it comes to losing money, and it doesn't have to be in the market. And so for some, it affects their future decisions based on their previous experience. Super Bowl is happening. Oh, I'm betting $1,000 on my team, or so happen to be wrong, and then it hurts, man. It just hurts. That way, it scars you enough where you never watch football again. And for me personally, I'm not a fan of gambling. I did a little bit of gambling and never lost too much money. um, but it was a thing for me to learn in the market, to learning how to lose money and being okay with it, not being okay to lose, being okay of letting the probabilities play out.
That's where confidence in the trading plan will help.
And so like losing money, right? That's like a common fear that many traders have. You know what I mean? But at the same time, like I hear a lot of these younger traders getting in and they just YOLO everything. You got the Reddit traders. They're ready to lose money, but they're making a bet big enough where if they are correct, they will make out and better their lives. Go
My
for it.
final word is for losing money. Like, if you're afraid to lose money, that's like the first fear that has to get out, because you already have an account. If you already have an account and you're afraid to lose money, you've already, think of it as a loss in a sense already. Detach in the sense to detach yourself from the emotional attachment to your account. You know, once you invest it, it's done. Move on with it.
So
You can't be afraid to.
how would you help, like what kind of one, if you were to give one tip on how to help detach yourself from the losing money part?
That just takes practice, lots of practice, I would say. So like I think it goes back to your trading plan and the confidence you have in it. If you're afraid to lose money, you can't be afraid to lose money if you know the probability, you know? Like, okay, 4 out of 10 trades I'll lose. Okay, that's fine. But if you know that statistic, you won't be afraid to lose 4 times in a row.
I think what would help a trader if I was to restart again about losing money, helping getting over that fearful thought of losing money. For one, you shouldn't trade with money you can't afford to lose. Two, start assessing your current language on the things you're saying about losing money, and then start flipping the perspective about it, like, hey, I'm willing to risk 0.5% or 1% on this trade, and my expectation, if it goes my way, I'm gonna make 2%, I'm gonna make 3%. That way it kind of detaches the dollar aspect, or the dollar, just the term, right? Puts it into perspective. That way you're usually looking at the numbers, you're kind of looking at it from a distant view, and then really putting your focus on the strategy, the psychology, the mindset. You know, a bonus thing, so one thing you can do is say you have a trading account already, and your platform, what I used to do is hide my P&L, my dollar amount, you know, from the account. I would just hide it, and then all I did was just look at my pips or my ticks, either down 100 ticks or up 200 pips, you know what I mean? So that was one quick way for me to kind of just start flipping that, having that perspective. Just hide your P&L in your trading account.
That's a really good tip right there, because one thing that helped me in my trading is switching the dollar amount to percentage amount. It's kind of similar to what you're referring to, but removing the dollar sign for some reason just clicks in your psyche, and the percentage sign makes it so much more comforting to experience winning and losing.
Yeah, try it out. Try it. See which one works. Would you rather just look at pips or percentage? You know, that's super great either way. The third point on having fear in the markets is the FOMO, fear of missing out. You know, as another main catalyst for bad trading. It leads to us feeling left out. All my friends are in this trade. They just bought this crypto. I need to get in. How many of you guys said that? You know, raise your hand right now, wherever you are, you're driving,
Dude,
whatever,
NFTs. It was
right?
the NFT scene for
NFTs,
me.
the stock, the IPO. Oh, my friends are just making killing. I need to jump on, dude. Everyone probably experienced a little bit of FOMO, especially throughout these past 2 years, I believe. You know, since COVID
Hmm.
kicked off lots of stuff. People have their eyes on their screen a lot, you know, and it just created an environment where trends and investment, the latest and greatest thing come out, and it would spread like wildfire. NFT market, like you were mentioning, bro, big thing past year and a half. For me, when it comes to dealing with the FOMO, fear of missing out, there's many examples. You and I share trades with each other. You catch moves that I missed out on, vice versa. It's gonna be natural to have some sort of FOMO with it. Be like, oh, I should have been on that USD yen trade that Reed was doing, dude. What was I thinking? For whatever reason, right? It was just see that, like, those two lines, right? I should have been on that trade. What was I thinking? Those two things can just lead down a little spiral, guys. Like, it just came out naturally, right? For me. That's something maybe I still need to work on myself, but being able to be aware of it and catch it, those are key things. But like I was mentioning, with having that fearful thought of missing out, that just opens up the door to not being at your prime with trading. You're opening up the door of beating yourself up, lowering your confidence, lowering the confidence in your strategy, lowering your just self value in a way. Those are the different things that the FOMO aspect can open up.
I feel like FOMO could work externally as well because, like, let's say you want to go to an event or a party or something, and not so much the older crowd, but the younger traders, they want to go to lavish things. And that actually takes you away from the charts. That takes you away from opportunity. And then you actually are leaving money on the table. And let's say you're at this event or something, and you place the trade then and there because you feel like you're missing out and you're not managing it the way you should be. Basically, you're not sticking to your plan. You're not following a plan. This person probably doesn't even have a plan to begin with, because you wouldn't be doing that while you're out. So I mean, that's just something too. Like, they don't want to miss the event, but they also don't want to miss out on trading. So they combined it. They'll be like, I could go and trade.
And you were just mentioning, and the last thought of having fearful thoughts in the market is leaving money on the table. I catch myself slipping doing that too. I would go over my trades, and I would see, like, oh, dude, I left money on the table. I exited prematurely. I exited for whatever reason. I make up all the excuses. But for me, I think the biggest thing to help overcome that fearful thought is to accept it. Accept the current outcome of the trade, because beating yourself up won't make anything better. Understanding the market sentiment is a great way to look at the whole market environment and kind of understand what phase or cycle the market is in. And in that way, you can start formulating a theory on how to trade the current market. That's where I see this fear and greed index play in. We've already just seeing this decline, the 20-30% drop from the all-time highs on these many indices. That kind of already shows that, yeah, we've been in a lot of investors are fearful. We've been in a bear market. It's just something to be aware of.
A key component of actually improving your trading is actually knowing when and where you left money on the table and how to squeeze out a little bit more, and that's how you refine your trading. But as far as, like, the fear of leaving money on the table, I mean, that kind of, to me, overflows into greed. Is like, oh, you're gonna cut your winners short real quick because you're afraid that I'll be leaving money on the table, in the sense of closing a trade too early. Do it take profit or let the trade run?
You'll never catch the top and bottoms of a move. But if you always try to have that fearful thought in mind of, like, oh, I cannot leave money on the table. Absolutely not. I cannot. You're going to be over complicating maybe your strategy that you're formulating. You're back testing a certain strategy or approach, and then you're going through it and you're like, oh, okay, this trade turned out this way, I'm gonna make my exit here. But this trade turned out this way, oh, I'm leaving if I was to follow my previous trade, then I'm leaving money on the table. So that's what comes to mind when, if you're in a back testing phase, not currently trading in the market, or just going over your previous trades. You're always changing. You have to figure out how to make a trading approach where it's robust, where you can just have it set in this function and not always change the parameters like this. That comes to mind, and I feel like that's a way to really gather the right data over a long period of time in different market environments, and really just utilize that to be profitable. It's not going to be perfect. We have to erase that thought out of our mind of being perfect. And so, yeah, missing out, leaving money on the table, losing money, common, and being wrong. Out of the four, Reed, which one is like the biggest? Would be the like
Thing
the
to overcome.
stands out? Yeah, stands out for you. Yeah.
I think the one that stands out is being wrong because people always want to be right, especially like, yeah, me. I deal with wanting to be right. We all do. To be wrong in the market is you can't take it out on anyone or anything. You know, it's on you. Got to take full responsibility that it's you. So I think that's the biggest thing. You know, overcoming it, settling down the ego. How about yourself?
Out of these four, what stands out to me would be missing out. The FOMO, bro. I get hit with some FOMO. Yeah, yeah. Like I was just trickle down. It'll stand out to me, and I would question myself. I'd start second guessing my strategy, my approach. I'm like, why did I miss that move? You know, why did I miss that? Blah blah blah. Why didn't I jump on? It goes back to discipline. Goes back to did that move really abide by my strategy? Yeah, at the end of the day, you know, we gotta accept that. I tell myself, hey, I can't catch every move, I just need to catch the right moves. Thanks for joining in. Have a great night. Trade safe.